Hey, greetings to everyone. I'm Josh. So I'm going to be a teacher tonight, and hopefully when you see this video, so I'm still your teacher actually. So we have many opinions about how the lower time frame tends to look like. There are times that we feel like the lower time frame is actually a noise. Some of us just assume that the lower time frame is a noise and there's nothing really spectacular about it. Actually, it is not necessarily correct. I'm trying to say that it doesn't mean that everything is a noise. We understand that the higher time frame gives us a layout of the things that will happen on the lower time frame, but nevertheless, I feel like we are missing some things that we just have to pay attention to. So, if you trade with the higher time frame, you are good. If you trade with the lower time frame, you're also good. The only thing you just have to consider is that you have to consider how the higher time frame look like before you take any trade on the lower time frame. So for the purpose of this video, I'll be using the synthetic market. Hopefully by weekend I should be able to use the currency market. So now this is volatile 25, and I'm going to be paying attention to this particular chart from the 4 hours time frame. Actually, though this is a daily time frame, and if you look at it very well, this market is currently trending, like it's going up, it's trending, it's going up, it's going to the upside. So there are many things that I want us to pay attention to before we continue with our analysis. So this is a daily time frame. From our daily time frame perspective, remember this video is majorly for intraday trading, not for swing trading, not for positional traders, and just intraday trading. It simply means that the person is trading within a day. Now, so let's consider some things that has happened in the past. So when we look at the previous price action of this particular pair, we find that the market has been going up for a long while. And so I just want to have a bias from the daily time frame before I proceed with my analysis. So now let's look at this particular pair. We can find that we had a sell side liquidity that has been raided. So we had a sell side liquidity that's been raided, and it is something that's happened in the past. So we expect the market to come back, to come to this area. So technical analysis is saying that we are going to have this market heading towards this direction. But why? The reason is because there is an order block that has pushed the price to the upside. There's another block here that has pushed the price to the upside. Even let's look further. There are many sweeps that I can see. So I can see some sweep here, like liquidity sweep. So very, very glaring and obvious. I can see some sweep here. So having all of this, having this particular sweep, and the market has chosen to come. Market has chosen to tap into this particular OB. Now, which means that we are pushing up. So we're preparing for the market to move to the upside. So let's go to our 4 hours time frame and let's see how you can join this particular movement, because the movement has started for a long while. So my attention is actually here. So I'm focusing on this area. So let's look at the 4 hours time frame and let's see exactly what the market is doing. So permit me to delete all of these things, because remember I said that my attention is just here. Why? The reason is because the market is currently trending. So we want to look at the continuation movement of this particular price action. So let's check. Let me delete all of this line. Now I have a disclaimer, and let me say this disclaimer: it doesn't mean that you'll be 100% correct all the time. Yes, you're not going to have the market come your way all the time. It's either you make a mistake or you're not just sensitive to a higher time frame. So there is every tendency that this market, sometimes you have your stop loss. So it doesn't make you invisible. Even with what I'm about to explain does not make you invisible. So let's look at our 4 hours time frame. So we want to look at our 4 hours time frame. Now remember what I said, we are trending to the upside. So let's focus on what has been happening consistently on this higher time frame, and this is a 4 hours time frame. So I'm going to consider 4 hours time frame as a very big time frame here at the moment. So now we have this. We have this break of structure. We have this break of structure. So we have this break of structure. We have the market taking out this particular liquidity. Then we had a retracement back into this zone. Then after that we had another break of structure. We had another break of structure here. So when we had that break of structure, the market came back to come and retrace into this zone. Market start moving to the upside. Then we had another break of structure. So we had it here, and we had a pushback. So the market expanded to the upside. Then we had a pushback into this particular fair value gap. Then the market moves to the upside direction. So we have the market pushing to the upside. Then we had another break. So we had another break here, which means that there is every tendency that the market comes back and retraces this particular zone, then continue to the upside. So now the question is, okay, now if I have an idea of what is happening on the 4 hours time frame or the 1 hour time frame, what do I need to do? Now this is it. Now let's assume that this is how your 1 hour time frame look like. So you have your 1 hour time frame. You have a 1 hour time frame structure like this. You have a 1 hour time frame structure like this. Okay, so this is a break of structure or impulsive shift, anyone you call it. So we had a break of structure here. Then we had a pullback. We had this light pullback. Then the market moves to this area. Then later the market decided to take out this sell side liquidity. So there was a liquidity that was being raided here. Now, so when you have something like this on your 1 hour time frame, now the market came into this other block and you had an expansion to the upside. So if you have something like this on your 1 hour time frame, just to know that if you skip that 1 hour time frame after you've analyzed, that 1 hour time frame has lay a foundation for you. It has prepared the way for you. It simply means that, so if I have a structure like this on a 1 hour time frame, if I go to a 5 minutes time frame, there is something called the fractal nature of the price, which means that the fractal nature of the price has the tendency to come back and give me the same narrative that has happened on this 1 hour time frame on a 5 minutes time frame. Now this is what I mean. Now having this, if you have something like this on a 1 hour time frame, you will definitely have it like this also on a 5 minutes time frame. If you are diligent enough to see it, it is definitely there. If you have it this way on your 4 hours time frame, you will definitely have it like this on your 15 minutes time frame. So it simply means that you're waiting at this area to place your entry and the market moves to the upside direction. So now what I'm trying to say is that, you see this intraday analysis, I'm trying to let you know that all you just have to do, you are trading within a day. You just have to have a higher time frame bias. Like you have to have a strong bias, which means that, okay, are we going up, are we going to the downside? So if you have that, now the next thing I expect you to know is that you go to lower time frame for your entries. But when you have a time frame, it simply means that your eyes are always on the screen. You just want to pick the trade. Do you understand? Without making any rash decision. So for example, this is a disclaimer. If you have maybe a bearish movement from your daily or your 4 hours time frame, or even your 1 hour time frame, and you're looking for a buying opportunity on your lower time frame, there is tendencies that you will lose that trade. Do you understand me? So I'm not trying to say that it's going to happen 100%, but I can give you a guarantee that if you put in the work, you will see what I'm trying to talk about. So now this is it. So let me show you another thing. Let's assume that you have it this way. 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 On your 1 hour time frame, if you have it this way on your 1 hour time frame, you will definitely have it this way on your 5 minute time frame. What do I mean? If you have an expansion, a retracement back, then you add an expansion to the upside, you will definitely have it that way on your lower time frame. Are you together with me? So now all you just have to do is just that, get the direction. Then when you get the direction, the next thing, look for your impulsive shift. I mean your break of market structure. Then after that, then you wait for a retracement back into your order block. So permit me to say, use your order block. Do you understand? So there is another thing I want you to see. So let's assume that you have it this way. Let's assume that you have it this way. Let's assume you have it this way. Okay, the market has been pushing to the upside, and then suddenly we had the market coming back into this zone. Then we had an expansion. We had an expansion. Like we had an expansion, and now we had a retracement back, like a pullback. Then the market came back again into that. It will definitely come back into this zone. Then we had a push to the upside. So if you have something like this on your 1 hour time frame or 4 hours time frame, you will definitely have it on the lower time frame, like the 5 minutes and the 10 minutes and the 15 minutes time frame. So now let's look at the live chart. Let's see how it looks like on the live chart. So it means that if I get the bias, if I get the direction, all I have to do is, okay, let me shift to the next direction, like the lower time frame. So all your lower time frame is not necessarily nice, though I don't recommend 1 minute, but you can still use your 5 minutes and 15 minutes time frame to get all of these things. Now let's go into the chart proper. Let's view the chart proper. So permit me to delete all of these things. So I'm not trying to say that this is an holy grail strategy. No, that is not what I'm trying to say. I'm trying to say that it will actually ease of your stress. Yeah. So this is a 4 hours time frame. So let's go to 15 minutes time frame and see what exactly I'm talking about. Let's check everything that I'm talking about. So this is it. So let me delete all of those things. So remember, this is volatility 25. So permit me to delete all of these things. Remember, all you have to do is to get the direction. So when you get the direction, the next thing is to start know how to pick your trade. So permit me to delete all of these things. So this is it. So let's go to our 4 hours time frame. Let's just the 4 hours time frame to pick what we want to do. Just focus on the narratives we want to pick. So here is it. So we had a bias here. Number one, we had this break of structure. We had this liquidity rated. Then we had the market coming back into the order block. Then we had a push to the upside. We had an expansion here. So let me keep it here. So we had a retracement. So now let's see how the market continue from all of this movement till this particular area. So let's look into it. So this is the 4 hours time frame. The last structure we had, this was the last obvious structure we had. So we had a liquidity that was being rated. We had a break of structure. Then we had a retracement back into this point. Then the market started moving to the upside. So let's look at how the market forms. So let's go to our 15 minutes time frame. 15 minutes time frame. So these are 15 minutes time frame. So let's look at what I was trying to show us. Now this is it. So here is it. Market started like this. So this was where we had that push to the upside. So let's look at how the 15 minutes time frame started pointing their own movement to this particular area. Now here is it. So we had this point. This is a 15 minutes time frame. We had this point. We had this structure being being shifted. So we had a structure shift. We had a sell side liquidity here that was raided. So after that, we had the market coming back into the other block for the first entry. So we had our first buying opportunity here. So then the market pushed to the upside. Now pay attention to something. A high was raided. So this particular high was raided. Like a break of market structure, we had it again. So when we had it, now start paying attention to, if you have a mind that is actually paying attention to what is happening on the chart, you find out that there is something spectacular here. So the market came back into this particular other block. But now if you draw your attention properly, you will find that there is a liquidity that was being raided. So that liquidity raided, then the market came back to tap into this particular order block for another buying opportunity. Then after that, the market rallied. The market rallied to the upside to clear out this high again. So after this market rallied to clear the high, so we had this high being cleared out. Now, pay attention. There is something here. We had a break of structure here. So there's a break of structure, and we had this other block here. And if you remember that 4 hours time frame, if you pay attention to it very well, you will find out that the market did not come to this area, but rather the market only pay attention to this area, this particular area. So we had this entry, this buying entry. So we had this buying entry again. So after that, we had another push again that took out this particular high. And now, to now show you something that is very, very, very consistent with what I've been saying since morning, I said that majorly you always see something like this. So we had this mini break of structure, and if you look at this very well, we had this liquidity being raided again. Then the market came back to come and tap into this particular order block. Then the market shifted again to the upside. So since then, we'll be having the market moving to the upside direction again. Then after that, we had another thing again. Now here is it. So I'm trying to show you the number of places you can place your entry, like many opportunities. Now we had this area again being raided. So we had this zone. Being expanded, and you see the market coming back to come and retrace it. So just know one thing about the market: whenever there's an expansion, there will definitely going to be a retracement back into that same zone. Then after that, we had this again. So after we had this, then there was a liquidity again that was raided. So we can have another buying opportunity. So we had another buying opportunity into the same zone. Since then, the market has been going up. So what I'm trying to say is that now the market has given us structures. So we had this particular structures. Market came back to come and retrace. We had an expansion again. The market came to retrace. The market keep on clearing this liquidity. You can see sell side raided, another sell side raided. You can see it. Then we had an expansion again. And one thing about it is that markets respect zones. Markets definitely going to respect all of the zones. What do I mean by the zone? Like the possible other blocks that you can see. For example, now if you look at this particular high, we had the market coming back into this same zone, this other block. Then after that, we had another expansion to this high. So where's the zone? Here's the nearest zone. Then the market came back again. So then this high was raided. We had this zone. Market came again to come and tap into this same zone. Then after that, we have this particular high we raided. Then we have many zones inside it. So one of the zones is this. So the market came back, cleared the sell side again. Then we tap into it. The market expanded to the upside. After that, we had another you can see we have another inner structure here. The market expanded to the upside again. We had this zone. You can see the market came back to it again. And after that, we had this expansion. Sell side raided again. Pay attention. Sell side raided. Then the market came into this zone. Then we had a push to the upside consistently. So what I'm trying to say is that all you just have to do to pick any trade from the lower time frame, no, for your lower time frame, all you have to do is pay attention to the structures you are going to be using. So what I expect you is that if you can get the directional bias from your daily time frame, I expect you to start your structure either from your 4 hours or 1 hour. Why? The reason is because they are very, very strong. Structures on that kind of time frame, they are precise. They give you a specific direction. So now remember this: if you had a structure, maybe you just had a break of structure, a retracement back into that same point, maybe that was what you have on your 4 hours time frame. If you go to 15 minutes time frame, there is every tendency that the market will replicate what has happened on the 4 hours time frame. So now move to your 1 hour time frame. If you had that same thing also, the market will definitely going to repeat it on a 5 minutes time frame. So if you know that you are not busy and you want to trade the lower time frame, all you just have to do, eyes on the screen, look for your directional bias. When you have that, look for a structure on your 1 hour or 4 hours time frame. Then your entry should be on your 5 minutes or 15 minutes time frame. Now the question is that, Joshua, how about your 5 minutes? How about your 1 minute? Okay, I mean 1 minute, not 5 minutes. So all I want to say about the 1 minute is that I won't recommend it. I don't know why to say that, but permit me to say I'm not recommending it. So all I want to say to everybody is that it can be mastered. Forex can be mastered. I know it is not very, very easy. That is the point. It is not very easy, but put in the work. Keep on showing up with the right knowledge. If you show up with the wrong knowledge, sometimes it can be so fun. You keep on losing your money. Okay, now to stop talking too much, this is what I want to say. And a disclaimer again at the end. Remember very, very well that this is not something to make you lazy. You have to put in the work. Open your eyes. Look at the chart again and again. Look at the chart again and again. Look at the chart again until you understand. Do you understand? You have to practice. You have to keep on practicing till it becomes your own. So nobody is going to hold you by the hands, like be trading for you. Though people do that, but I'm just trying to say that it makes more sense when you understand it yourself. So that thing is not a rocket science. All you just have to do is just calm down, learn and learn again. So if you have any question you want to ask me, you can ask me on the comment section, and please subscribe. So nice having everyone. And one thing I want to say is that please share to your friends, share to your family, share to people trade forex. Let them know that there is value here, and I promise to keep on showing videos of like an insightful video. So nice having everyone. Thank you so much. Till weekend.